just looking at market activity, we had on Friday things pretty bullish and commentary out there saying that it's hard to argue against the case that we've got further to go in this bull market economic recovery cycle. Today, though, things looking pretty tempered. How are you viewing the market's picture right now?
No change in our feeling towards the markets, Alishia. You know, we're coming off the back of a really strong recovery. We're well over 2,000 points off our lows prior to the Japan crisis, and we remain bullish. Today was just a very quiet day on the markets. A lot of the big stocks on the index going ex-dividend today as well, and that adding to the reason why they're trading down today. So yeah, our view remains stay long this market.
Well, we'll be getting into some of those stocks that did trade ex-dividend today. In the meantime, what's your approach to the markets? Are you looking at this being a stock pickers market still, or should investors be basing decisions more so on sectoral themes right now?
I think at these levels, where the markets currently are, we like to be picking sectors. We favour the resource sector at the moment. We think that that's the sector that's lagged the most, and is offering the cheapest value at the moment.
Of course, when it comes to the resources, when it comes to the resources space, we've had the diversifieds really standing in the spotlight with Anglos and BHP stealing attention. Are you sitting in the same camp, looking towards those key players?
For sure, and specifically Anglos. Anglos is still down 6% for the month, so it's got a long way to catch up to the rest of the market.
Taking a look at other specific companies, though, we've got two stocks that did go ex-divvy today in the resources space. Sasol, the first, hard to ignore that oil price hovering around $120 a barrel. Would you be buying at around about this 384 Rand mark?
Yeah, specific prices and short-term views on Sasol are hard to make, but in the longer term, we like Sasol. It's part of the resource index, and we think it is offering value here. It's trading on PEs below 10 at the moment, in line with the rest of the resource sector. So we like all the stocks across the resource sector.
Let's then get
especially oil with.
Continue.
We like Sasol as well, especially with what's happening with oil in the Middle East and North Africa. Adding to that.
What about a player like Exxaro? Because it's another company that went ex-dividend today, down over 1% by the close of the session. Just taking a look at it, demand still out there out of China, Japan possibly on the back of rebuild efforts as well, India as well. Many still have this coal play right on their radar screens.
Exactly. We like Exxaro as well. With China trying to get a foothold in Africa and gain control of resources, coal's definitely a place you want to be involved in. And once again, Exxaro happens to be one of the cheapest stocks on the market if you look at what their PEs are relative to what people are expecting them to earn. So we like Exxaro as well.
While attention is on the resources space, how are you viewing the banking sector right now, Richard? Because we had RMB in a note last week forecast a South African stock rally, and that they're saying being led by the banks, where they were saying banks may jump 40% with valuations as low as 10 times annual earnings. We had Investec, on the other hand, holding a more bearish view. Your stance on some of the banking players?
On the banks, I think we'd be somewhere in the middle. I think banks are fairly valued around these levels, so I would be holding on to banks here as opposed to buying or entering into any new positions right now.
Getting specific, Standard Bank, it's dropped down to about 103 Rand at this stage. Many traders saying that they'd be buying the stock at below the 100 mark. Your view on Standard Bank specifically?
Yeah, below 100, I like to be picking Standard Bank up. Today specifically, though, Standard Bank is ex-dividend, don't forget. So they've held most of their dividend. I think they're effectively actually up on the day, considering that dividend's gone ex. But yeah, below $100, we would be looking at picking up Standard Bank.
I guess it's no surprise that one of the sectors you're steering clear from is the construction space. We had Stefanuti stock saying today that it sees headline earnings per share between 10 and 20% lower than the comparative period. And this, the kind of trading statement we've started to get used to out of South Africa's major construction players.
Yes, definitely. And by the looks of it, looking at how Stefanuti's traded today, after that trading update, not looking too great, but the stock jumped 5%. So I think a lot of these stocks are priced in very bad news. And when this news comes in, when these trading updates come out that show you that things aren't as bad as what they were expecting, you're going to see the stocks jump like this. So you'll see the likes of Basil Reed and Stefanuti both performing well today on the back of that trading update.